Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our weekly recap for July 30th through August 3rd. We're going to try and make this very quick. We're going to take a look at last week's changes for the week over the four main index changes for this week: S&P 500, Dow Jones, the NASDAQ, and the Russell 2000. Take a look at my portfolio changes for the week. Go over current futures going into Monday and next week. Go over a couple stocks that had some nice movement, either up or down this week. Of course, we had our first U.S. trillion-dollar company, with a market cap of $1 trillion. Take a look at two stocks that are moving, that are down for the year, but could be potential opportunities. And then we're going to go into our main home construction, our oil, US dollar, silver, gold, bonds, and ended up there. So if you are brand new to the channel, I do make stock market and investment videos weekly, so consider subscribing. And of course, if you do like the video, hit the thumbs up button below. I'd highly appreciate it. It really helps out the channel get those views. You can see these weekly recaps get about 50 views. I'd like to increase that. Otherwise, maybe we'll try and put in some other videos instead of these weekly recaps. So S&P 500 last week moved at 0.61%, Dow Jones up 1.57%. The NASDAQ was not quite our loser. It's in second place there at negative 1.06%. The Russell was the main loser last week, down at 1.97%. This was one to kind of highlight last week. I mean, Russell 2000, that's our national stocks. So when you're taking a look at the economy, you're kind of wondering what's taking a hammer in there. The Russell 2000 to be that one to look and watch out for. My portfolio moved up at nice 0.84%. Now going into this week here, we had the S&P 500 5-day change up 0.76%. So again, last week 0.61, this week 0.76%. So very nice steady increases. I don't expect any sort of pullbacks next week unless something crazy goes on. But right now, year to date up 6.24%. Now the Dow Jones, it was a huge leader last week, going up 1.57%. This week, only slightly at 0.05%. Can you imagine this week in the Dow Jones without that huge win for Apple? So year to date, it's still the loser to here. Dow Jones up only 3.01%. The NASDAQ was not quite the loser last week, but it did have a decline of negative 1.06. So it made back some of those losses, movement up at 0.96%. Year to date, 13.610%. It's currently the winner. And second place, we have our Russell 2000. So the Russell got slammed last week, losing nearly 2%. This week, very slightly, basically a quarter of what it had lost last week. 5-day change up 0.6%. Year to date, still in second place, up 8.98%. Now my portfolios, I track my IRA, my Roth IRA. These are both on M1 Finance. I have my thrift savings plan from the military. Very small, what I had in there. My wife's portfolio over on M1 Finance. So Apple being my primary one within my IRA, up 8.69%. Roth IRA, tiny amount in there. We went over that in our monthly recap videos. On Thursday, released my wife's M1 Finance recap for July. Check that out if you haven't watched it. We go over the total gains for the month of July, what stocks paid out dividends, where those dividends were reinvested into, and Friday, we went over my portfolio over on Merrill Edge, stocks that paid out dividends, total equity changes there for the portfolio. Didn't quite have earnings for Apple going into those changes for the month of July, but really helping out right now in August here. And then basically, so up for the week, we're up 3.72% this week across the changes there for the portfolio. So we did beat all the indexes here for the week. We beat them all out there. The after hour changes right now, stock futures are looking positive. Again, I don't see anything going into next week that would have any sort of negativity as far as, what's out there right now. There's no big earnings that I'm tracking. Most of my earnings are complete. The FANG stocks, I believe, are all done well as well, the ones that are kind of holding up the market. So I don't see a whole lot of change going into next week. Facebook, of course, they did recover off their lows, so they moved up nearly nearly 2% here at 1.65%. Year to date, they were in the negative there. They lost a huge chunk in the last few weeks. So year to date up 0.75% this week. I saw a lot of investors out there chatting about Facebook. Is it a value buying opportunity? I think it is. They haven't monetized Instagram. They could definitely do that. Find a way to make revenue. I know they're doing that Instagram videos. So we shall see. I believe Facebook is going that route, and we're going to see revenue and net income there increase for Facebook, and investors are going to like that. Tesla moving up a nice amount this week, 17.16% year to date, coming off the negative for the year, up 11.83%. So Tesla, they had their earnings here. You can see after hours shot up a very nice amount here, not because their earnings, not because their their earnings per share, their revenue, but because Elon Musk came out there. He could sell you a towel and make it worth $500. Well, he came out saying that going forward, they're expected to be profitable and cash flow positive going into the third and fourth quarters for the year. He also said that the new Tesla models, which were supposed to be, I believe, $35,000 to $45,000 for their Model 3s, are now going to be $50,000 to $55,000 for their Model 3 electric vehicles, and that is above estimates. We'll see. That's more revenue for the company if investors or just people out there that are looking for that Tesla model are going to be buying, and it's all going to come back and help their pockets. So Twitter coming off, losing 6.33% there for the week. Year to date, still up 33.11%. Don't follow the stock. I just know a couple of investors out there have been buying it. I don't see a whole lot going on with Twitter myself. I don't really use it. I attach my accounts, for social media wise, but I don't use it actively. Netflix, again, getting hammered here, down 3.41% this week. I don't see it. I don't see this one being a great long-term buy and hold. I just don't see where they're seeing this growth. But it is up very nicely, higher than any of the other FANG stocks, I believe, here for the year to date, up 78.73%. There's other preferences out there, in my opinion, that I would prefer, Disney being one of them, but I do see a lot of investors buying into some Netflix. Now, this week's value stock buys are Caterpillar and Procter & Gamble. Caterpillar continuing on the decline this week due to tariffs. Steel, aluminum getting much more expensive, going to get taxed. And while they're not raising rates, so their debt isn't going to get hammered there, they're still getting hit with those tariffs. So anything that has to do with steel, aluminum, if it's in your portfolio, you might be getting a little sting going into the next quarters. Just because, Pepsi out there was announcing, I believe it was either Pepsi or Coca-Cola, that they're going to be increasing the price due to the aluminum. Their Coca-Cola cans, their cans are made out of aluminum. Procter & Gamble, they had a positive change this week, moving up 2 point and some change if this thing would load. Still down year to date, 10.39%. Not down at their lowest. May would have been their lowest point here from when I was checking it out. I did not buy into Procter & Gamble in May. Don't believe I'm a shareholder of it in any of the accounts I'm in. 5-day change up 2.17% this week. It's one of those dividend aristocrats paying out dividends for more than 25 years. I believe they're in that 40 range, I think, 44, somewhere around there. Apple, let's go back to 5-day change. Apple, Tuesday, after hours, blowing out revenue, blowing out their earnings per share. They're increasing their services. They're increasing their sales overseas. Very nice growth there, blasting up here. Nearly 6% on Wednesday. Added an additional 3% on Thursday. Additional 0.3% on Friday, and finished off very strong on, for the week, up 8.91%. This is where all my gains came, basically in my IRA. Really helped out my portfolio. Last year they were up nearly, right around 40% for the year for 2017. Year to date, currently up 22.9%. I still see Apple continuing to grow very nicely. So no negative outlook there as far as Apple goes. Home builders, lots of videos have been coming out, lots of articles have been coming out about the housing market crash. Has a lot of people out there scared, not wanting to either buy or invest in real estate, thinking about their choices if they should take on more risk there. I was in contract on a property. My first property, I had been in contract for 32,000. The estimated repairs were around 25,000. The aftermarket value was around 85,000. I actually had to jump out of that one. I used a contingency for inspection. The estimates for my contractor came out extremely high, almost triple what had been expected, and that would have put me over the total market, the after repair value of the home. So due to that contingency, I just let the seller know, hey, backing out due to this contingency. They let escrow know and to refund me back my escrow, and that contract was closed. Put an offer in again on Friday. I always try and make at least 2 offers a week, at least 10 per month, until I can get my first 2 properties locked in for 2018. Right now, put an offer in this week for it was 79,000 was what they were asking. Nobody had made any offers on it. Talked to my realtor. He said, "Hey, we should bid a little bit lower." I like to bid. If there's no offers on a property, I will go 5 to 10% below asking price as long as it meets my numbers. I wanted the cash flow. He said, we came to an agreement there. We put in the offer, and we'll see how it goes. It hasn't been accepted yet because I just put it in right around 4 or 5 p.m. here. But we'll see on Monday if that goes through. I'm still looking out there for value buys. As Kevin says over on Meet Kevin, you look for the what does he say, like the niche of the market, something around there. Oil still down year to date, and not year to date, down for the week, 0.35%. Had a huge run up on June, so I expect oil to kind of taper off and not really move any higher. We'll see. There's some big changes here. Monday up, over 1%. Tuesday down over, very swing there. Swing wise, these things are moving up over 1.5 or moving down nearly 1.5. So interesting to see that kind of movement there. I would check out with sanctions against, overseas and what they're doing there. That would be a factor if you're investing in oil. Don't own any oil myself. Now, US dollar moved up slightly off their lows for the week here, starting off the week at 94.65, ending for the week at 95.22. Rates, Fed came out Wednesday and decided they're not going to be raising rates, which was expected. I believe we covered that in our last video, our weekly recap, saying they're not going to be raising rates. They want money to stay cheap. They want people not to be scared to be buying the houses. They don't want to raise those rates. People are already not going in to get their mortgages, get approved for loans, put it in offers. They're not going to listings. They want the economy to slowly recover and kind of tamper off. Right now, if they start ranking up rates, we'll see rates increase by about 0.25% in September, November. I do expect that. But right now, very simmering. So silver and gold went down again this week. No, back in November, September of 2017, that would have been the high point. If we take a look at the 1 year, September. Okay, so $17 would have been in September. Right now, they're down at $14.50. I don't know where the bottom is. I know people had been buying into silver. I saw a couple saying, hey, you should get into silver, get into gold. I think physical is much better. I have a couple silver sitting over here somewhere. Yeah, a couple little dollar tokens. It's all physical. I don't own anything. So it's 1 ounce Troy pure silver. And then I have some, what is that? A couple other 10 ounce ones. So I own physical stuff. I don't own anything within, somebody else would hold for me. Gold, again, moving down. Anything material-wise, down 0.79%. Year-to-date, down 7.06. This is almost near the lows year-to-date, or at those lows, basically, almost within that week. So 5-day change. This would have been that low for the year to date, but it did come up slightly here on Friday. I don't know what made that move up on Friday. It wasn't the job announcements, but we'll see. Bonds moving down after Fed came out, said, hey, we're not going to be raising rates. Bonds dropped there by 0.3%, but they were bought up very nicely on Friday. As you know, market, I don't know if it opened up lower on Friday, but I know there was a little bit of buying into bonds here. Looks like you can see the huge bar right here on Thursday. So they were buying up bonds on Thursday. There was a couple of little buying up bonds on Friday. And ex-dividend here was on Wednesday. They're going to be paying out nearly 20 cents per share. I believe it's right around a 3% yield. So I've seen a couple investors jumping into the bond market, buying up some bonds. They're going 50-50 in the S&P 500 and in the bonds, just to be diversified, just in case there is fallout. But there's a lot of people that are optimistic and there's a lot of people that are pessimistic. I think we're going to see more upside. It's just going to be slower than it has been. So prime rates hadn't changed. Don't expect any prime rate change there from a 5% to a 5.25 until that November timeframe. Now, we didn't talk about the unemployment rate. Unemployment rate for July dropped down to nearly 3.9% in comparison to June's numbers at 4%. This is because the surge of Americans deciding to join the labor force. People see that it's worth to go out there and work. Minimum wage is up. Minimum wage for Oregon was at $9.50 or $8 and some change just a few years ago. Now you get a minimum job, you're getting paid $10 and some change. It doesn't quite keep up with inflation, but people are more willing to go out there, get off their butt, not stop collecting unemployment and whatever benefits other people make, but they're going out there and finding some jobs. So good pat on the back for them. We had the Fed, we already talked about that, deciding not to raise rates, and then Apple tension. So really the market, all due to Apple kind of picking up, saying, hey, we're doing really well, let's continue moving forward. So that is it for this video. I try to make it as quick as I could for the week. If you did enjoy it, of course, hit the thumbs up button below. I highly appreciate it. It really helps out the channel get noticed. I would like to get these weekly recaps just a little bit more out there. So if you can, share it with your friends, share it over on Facebook. And if there's anything you would like to see in these videos, let me know in the comment section below. And of course, any comment that you leave down there, regardless of what it is, if it's related to this video or just a question in general, I always reply back to you guys. So leave it there. I will read it and respond. Of course, I want to thank everyone for watching. If you did like the video, I already said that. Subscribe to the channel. As a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, looking over the changes for the week and some possible outlooks. So that is it for this week. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.